Hello, everyone from Puerto Vallarta, Mexico. I hope you guys and your family are doing good. I'm here to keep you up to date with current market conditions, so I'll go ahead and jump right into it. So, one of the things I was kind of looking into that I found very interesting was basically home builders, right? And this is in terms of the real estate market. So, why home builders, right? Because home builders basically gives you an idea of supply and demand, right, in the housing market, right? Because they're the biggest suppliers of houses, and I want to say the American market in this case, right? Because this is the market I'm watching. Um, basically, one of the big home builders, KB Homes, announced that its buyer cancellations rate in the fourth quarter of 2022 spiked by 68%. That's huge. That's like '07, '08 levels of cancellations from buyers purchasing new home builds, right? Um, so that's something that they were basically reporting. And I found this article here specifically interesting because it goes into Federal Jerome Powell, which is the Federal Reserve of the chairman of the Federal Reserve, right? So he basically said not long ago that the U.S. Housing market would slip into a difficult correction. I don't know what he means by that, but I guess he's pointing out the fact that interest rates are hurting the housing market. Um, and mortgage rates, yeah, they fluctuate up and down, right? They occasionally, a few weeks ago, I think they dropped down quite a bit. And I like to point out that Federal Reserve does not control mortgage rates, not whatsoever. They don't control the only rate the Federal Reserve controls is the Fed rate. It influences all the other interest rates, right? But it doesn't control them in any way, shape, or form. What typically controls mortgage rates is demand, right? Demand and speculators, because speculators buy mortgage-backed securities and they speculate with them, and that can kind of cause these occasional fluctuation in interest rates that we might have been seeing. But overall, at least coming from the Federal Reserve and mortgage rates should be being pushed up because the Fed fund rate continues to go up, right? Um, so uh, Jerome Powell basically points out how he noticed that first time home buyers were overpaying for properties up to 10% and above. And I saw this firsthand personally back in November 2021. I saw how crazy the real estate market was, and I decided personally to sell my home and get out of the market because I felt that that was not going to last. You know, when things get exuberant like that, typically um the party comes to an end, right? It's not always going to be that kind of hectic, crazy demand for housing where everyone was just like jumping one over another to throw offers at the home seller to sell the property. But people thought that was going to continue on forever. I mean, it's happened in the past and it's happened again, right? And it always leads to the same result. So why this time would be different, I don't know. So this is again Jerome Powell kind of going into it saying we probably in the housing market have to go through a correction to get back to that place, Powell said. So basically where housing prices are going to be affordable again, right? Because who the hell is going to compete with people um anyone that just comes in and says, "Oh, I'll give you 10% over the house price. I'll give you 10% over that what that guy wants," and these insane bidding wars that were going on in second quarter, third quarter, fourth quarter, and throughout 2021 in the housing market. It was just ballistic, right? So KB Homes is one of the big guys in the home builder industry, right? So they've basically been signaling that they had a massive uh exodus of buyers back out on new builds, right? They're advising that in the fourth quarter of 2022, the buyer cancellation rates spiked up by 68%. Um, According to them, that's up 35% in the third quarter of 2022 and up 13% from the fourth quarter of 2021. And I personally don't think things are bad. so far yet. Why? Because I'm looking at all these home builder stock prices, and they're still very overvalued. Considering the fact that there should be no reason for why they're valued at the current valuations in terms of what they're earning and so forth, considering now that they're kind of getting hit holding all this unsold inventory that they're now marking down prices to be able to sell. So here you kind of see basically this is right there a chart, a graph showing their cancellations, right? And this is one of the big guys in the home building industry, right? KB Homes. This is COVID-19 2020 when the market crashed. It was like a flash crash, literally, because the Fed stepped in and saved the market, right? And then now they're saying they're calling this the mortgage rate shock, but that's kind of crazy. The amount of cancellations compared to the COVID scare, which was for a while there, people thought it was the end of the world, right? So yeah, historically speaking, 68% cancellation rate is off the charts. Even during the darkest days of the 2008 era crash, the average home builder cancellation rate only reached 47%. So that's pretty crazy considering they're comparing this to 2008 in terms of buyers backing out of the market when it comes to buying new builds, right? And then this is not specifically to residential real estate. This is just home builders, right? And I like to look at home builders because they're usually the first ones to get hammered and get hit pretty hard, because they're the first ones where people start to back out, right? And in herds, right? So pressurized affordability, a 3% point mortgage rate jump followed a more than 40% run up in US housing prices. That was basically after the really low interest rates. Everyone was just trying to jump onto every piece of property they could get on, so the demand was insane, right? Has sent a shock wave through the US housing market. Some buyers are canceling their contracts because they're afraid that home prices will fall further in 2023. Others have simply lost their mortgage eligibility in the face of 6% mortgage rates. So basically, money is getting more expensive, right? Tight money, tight monetary policy, right? They're making it more expensive to get these loans. Higher interest rates means you're paying more money, right, to borrow that dollar that you're not using to purchase that mortgage, right? That's what's occurring. So a lot of people are getting priced out currently because of these high interest rates. So they start a lot of the home builders, they started offering incentives like mortgage rate buy downs, and it doesn't work. Then they begin to mark down prices, right? Home prices, to get their unsold inventory hopefully sold. So that's kind of one of the strategies some of these home builders are doing, and marking down prices to hopefully start selling a lot of these unsold new builds they have, right? That the reason for the markdowns basically is a lot of the home builders are trying to protect their comps, their comparables. This is why they prefer to offer incentives like mortgage rate buy downs rather than cut prices too much, because otherwise all the comparables for all the other builds start to come down, right? Last sold price for the last one is lower than the other one. Boom, boom, boom. Comps start coming down, right? Comparables. Therefore, the most recent comparison to sell that new build, right, starts going lower and lower and lower. It's like a domino effect, right? Kind of the opposite of what was happening on 2021, where it was going higher and higher and higher because people were bidding up these prices to these homes to crazy prices, right? And then it was just like recent sold here, recent sold here. It was like sweat prices kept escalating and escalating up, right? So I kind of like this little chart here because it goes into where mortgage rates are right now, which in reality they're not that bad, right? Considering to historic mortgage rates. So these are all the big boys in the home builder industry, right? You got D.R. Horton, Leonard, Toll Brothers, KB Homes down here, and then this is their stock price performance. Still very overvalued overall, considering the fact that they're having all these cancellations, and they're not making as much money as they were making last year, considering the fact that their stock price is still pretty overvalued. That's what I'm seeing. It's not really reflecting what's going on. So I'm curious if this is at some point, going to swap the other way around, right? Stock prices are going to continue going down. As you can see here, COVID crash, right? All these home builder stock prices plummeted. They're still pretty overvalued considering the fact that where they were not too long ago, right? So while major home builders are all down from their 2022 highs, they are still well above their January 2020 share price. That includes builders like D.R. Horton, up 78% since January 1st, 2020. Leonard up 73%. Toll Brothers, and all these other home builders, including KB Homes, which is up the least out of the group, right? 1%. So all these home building stocks are still extremely overvalued considering what the market is currently doing and how it might potentially be slowing down further. And considering the fact that they're announcing that they're getting kind of like some pretty historic rates of buyers backing out of purchasing their new builds, right? And then on another note, something I never typically listen to BlackRock, but I always find it interesting to see what they're saying, considering BlackRock over the last couple of years has been in the business of losing money, not making money. They've lost so much money over the last couple of years, is in the trillions and trillions and trillions. I mean, just in the Russian crash that occurred not too long ago, they lost, I forget, some kind of 1.7 trillion, crazy amount of money. And this is a lot of people's retirement accounts here, right? Because a lot of people entrust their retirements and their pensions and all this kind of stuff and governments to BlackRock because they're a big money managing institution, right? So the world's largest asset manager has to say, for a simple reason, it's predicting a recession unlike any other. I mean, everyone keeps saying a recession, predicting. We're basically already in one. It's just a lot of the prices not being reflected yet. So, and then they just go in, BlackRock saying that they're predicting that the central banks are going to cause a massive recession because they continue raising rates and so forth. But I mean, there's not really much of a choice there. It's either raise rates or let inflation get out of control and probably become an actual problem where now it sticks around, right? So then just BlackRock goes into basically recommending recession-proof equities like consumer staples such as foods, drinks, household goods, hygienes, things that perform well during recessions because people are going to continuously use, right? Such as things like, I don't know, typically cigarettes do well during recessions, alcohol, makeup. No matter whether the world's on fire, women still purchase and use makeup, right? Because they need to look good. Things like that are what basically are recession proof, right? Procter and Gamble, toothbrush, toothpaste, stuff like that. So kind of some of the things that BlackRock is basically going into. Before I swap up to the charts, I want to show you some of the ETF and indexes I'm gonna kind of jump into to give you an idea of where prices are in the housing sector, right? So first and foremost, HGX. I forgot the exact name of it. I think is Philadelphia housing sector. I'm not sure why they call it that, but it's just like an overall index that gives you an idea of the housing market's health, right? Because you got a lot of big companies within this index. You got some big companies that have big influence in the housing market in this index, such as D.R. Hortons, they're big time home builder. KB Homes, I just spoke about them. Another big time home builder, Leonard, Everything to do with homes. You name it, it's in here, right? Everything from appliances to materials to home builders to REITs, all kinds of companies that are just pure real estate related are within this index. And this is the HGX PHLX Housing Sector Index. The other one is the Spider S&P Home Builder ETF, which is basically again similar, is everything from home builders to appliances to materials to Home Depot, Lowe's, everything that has to do with homes, right? Building homes, renovating homes, um, furnishing homes, so forth. From Floor and Decor Holdings to DR Hortons, again, the big guys, Leonard, um, Whirlpool Corporations, the washing machines. You got Lowe's in here. Lowe's is the competitor of Home Depot. You got Home Depot in here. Everything to do with homes are within these this ETF right here, because this one's an ETF, the other one's an actual index. So that's just to paint you a picture of what's within this thing, right? So right now I'm just gonna swap over and show you. Over here on the left hand side, you have the XHB, which is the Spider home builder, which I was just showing you. Over here in the center, you have the HGX, which is the basically the housing sector index. And then this is the one that one of the charts I like to use, United States Case Shiller's Home Price Index month over month price changes. The one all the way on the right basically shows where prices have been headed, and it doesn't tell you where they're going in the future, and there's no way to know that stuff, but gives you an idea where they've been headed, right? So I usually like watching this one because it shows the change in housing prices month over month over a period of time, right? And since March, housing prices were dropping like a rock all up until August, where now housing prices month over month have been kind of recovering a little bit. They've been hopping up. It wasn't just a straight drop like a rock, right? It's actually been got a nice little bounce there. I don't know if this is one of those what they call it, fake cat bouncer or whatever, where it just bounces like a ball and comes back down. But no one knows, right? No one knows where this thing is headed. But I mean, considering that all these other indexes are still pretty overpriced, considering what's going on, I feel like there's a possibility that this might turn downward again. I don't know. I'm just being cautious with real estate right now. I love real estate, but I just don't feel it's the right time for real estate right now. So HGX index, right? Not too long ago, when all the craziness was going on, basically all-time highs. Now it's kind of down a bit. I don't know what is it down something like 20%. It's a pretty decent drop, but I mean, considering prices went ballistic, it makes sense. So overall, you can kind of see things are still pretty overvalued, but it seems like prices might potentially or they're potentially finding fair, reasonable pricing, right? Considering the exuberance, wild swings that occurred not so long ago due to the crazy low interest rate environment. And then you have here the XHB ETF, which is again home builders, Home Depot, housing appliance, all kinds of things like that are within this basket of stocks, right? So these can kind of give you a reasonable idea of where the current health, the housing market is. Because just think about it, if this thing is down, that means less Whirlpool appliances are being put into new home builds, and less new builds by home builders are being sold, and so forth. So seems to me like these prices might potentially go lower. It's just it's kind of become very volatile, right? And then you can just kind of get an idea or sense that of the health just by looking at these charts, right? Which I think is pretty cool that you can do that. because real estate is a very large sector, right? It's a big part of the US economy. And another thing I like looking at is lumber prices. Why lumber prices? Because I mean, just think about it. Homes, they're all basically majority built off of lumber, right? So more demand for lumber means there's more demand for homes. Less demand for lumber means there's less demand for homes, right? Because all these materials are used to build homes. And then it just shows you how it kind of correlates with the housing market, right? Because look back here, 2021, when housing prices went absolutely ballistic, guess what? So did lumber prices, right? Because everyone was going to Home Depot. They were renovating their homes after COVID. All these home builders were building tons and tons of homes, and they're the companies that usually buy these lumber future contracts in high quantity amounts, right? Because they're building tons and tons of homes. And then this kind of already, I was seeing this beforehand, kind of lumber prices dramatically fall. And I personally thought, holy cow, if lumber prices are falling like this, and then this around this time, August 2021, the housing market still was amazing, right? But lumber prices were getting hammered. Of course, I just feel like, I don't know, lumber prices in some way, shape, or form gives you a projection of where housing prices might go. Although it did have a big bounce here in February of 2022, and that was because of the war, right? Because lumber is considered an inflationary hedge because it's a commodity, right? When inflation goes up, commodities go up in price, right? Because that's how it works. They're inflation hedges, right? And then again, we're seeing now lumber prices down in the dumps. This is not a good thing for housing prices because it gives you an idea that home builders and so forth are not really buying a lot of these materials. And if they're not buying these materials, that means they're not selling or building more homes. Therefore, there's less demand potentially. Just some of the things I kind of like to look at when it comes to the housing market. So I kind of like look at it from all angles, from actual retail side to the actual home building side. And home building sector of the housing market is currently slowing down. They're continuously getting more and more buyer cancellations. All the materials and so forth seem to have been coming down to earth, such as lumber prices, for example. So that's basically just giving you an idea in terms of what might be going on with the housing market, right? It seems to be not necessarily crashing, but might be coming back to reasonable um valuation. I don't know, considering that prices were just ridiculously high not so long ago. But then again, now with interest rates at levels we haven't seen in a very long time, this is an interesting time to kind of be in and kind of see what's going on with the housing market, right? So with that being said, basically, thank you for watching. I hope I shared some great valuable information with you. And if there's anything I could do for you, feel free to hit me up. So I'll talk to you guys soon.